I've grown my portfolio to over $100,000 in the past 6 months. What if I told you your stocks could pay you extra cash every single week, like a dividend on steroids, without even having to sell them? It sounds crazy, right? But it's not. It's called selling covered calls. It's a strategy that pros like Warren Buffett use to supercharge returns. If you're holding more than 100 shares and not doing this, you're missing out on free money. Stick around, I'll break it down step by step, show real examples in Robinhood, and reveal how to start today. Picture this: you own stocks you love, but they're just sitting there. Meanwhile, other traders are willing to pay you today for the chance to buy them later at a higher price. Now, that's the magic of covered calls. For every call buyer gambling on a big rise, there's a smart seller, you, collecting premiums up front. It's profitable, low risk when done right, and statistically beats market averages. I've used this as one of my top strategies, and financial advisors managing billions swear by it. The best part? You can earn weekly or monthly passive income. It's passive cash flow that feels almost free. So let's break it down simply. Step 1. You have to own at least 100 shares of a stock you like. That's your cover to avoid unlimited risk. Step 2. Sell a call option against those shares. You pick a strike price higher than the current stock price and get paid a premium instantly. Say that you own 100 shares of Snapchat at $7.80 a piece. We're going to be able to sell a call on those shares. We're going to go out just 2 weeks till November 7th. We own them at $7.80, so we're going to sell a strike that's slightly above that. You see the $8 call. We're going to be able to collect $65 in premium. So there's two things that can happen. Snapchat will either be above $8 on November 7th, and we will make a total of $20 from just the stock going up, the 20 cents, and then $65 because of the premium we collected. So that's the first case. We'll make $85. The second case is if the stock ends below $8. In that case, we're going to keep this premium of $65 and we're going to keep our 100 shares. It's a win-win, and this is exactly how you rent out your stocks. So let me show it to you on a little bit different platform. It's called Option Strat. I really like it. It gives you a nice visual of what's happening behind the scenes. So the exact same position. We own 100 shares at $7.81. We sell an $8 call expiring November 7th. So you can see exactly, okay, if it ends above $8, you're going to profit $85. If it ends below it, you're going to keep the shares. And so this is showing you the difference between that share price and the amount you collected on the premium. And you see in the case where Snapchat drops 10%, so if it goes all the way down to 703, the stock's down 10%. However, in this case, you're only down $12. Everyone else is down $78, but because you were able to collect that premium up front, you're hedged to the downside as well. So this is one of my favorite strategies, and it's how you can force your stocks to pay you and essentially rent them out on a weekly or monthly basis. So of course, no strategy is perfect. The main risk with this is capped upside. If your stock goes way past that strike, you miss out on extra gains. But selling at a profit isn't a bad thing. You can still average more than 5% per month, which is way better than the market. Plus, if it drops hard, you're still going to lose, but the premium cushions it. Now I have a pro fix for you. You can roll this call if it's nearing the strike. You essentially buy it back and sell a new one at a higher strike later. I've done this to keep shares and stack on more premiums. You just want to avoid bad stocks. You only want to use this strategy on ones that you like long term and you're comfortable holding. So, what hooks everyone? This is true passive income. Your stocks work for you, and it puts you on a fast track to financial freedom. This helped. Smash that like button, subscribe for more options tips. Your portfolio will thank you later.